Hi everyone, it's Dotun here from DLX Dots channel. I've brought in my friend and someone that I've known for a very long time. His name is Matthew Chyla. He's got a lot of experience within the car industry, and I'm going to sort of allow him to introduce himself, and then we'll give you guys some hints and tips for the automotive industry. What's the best things to do and things that you should probably watch out for. And we'll basically just have this a bit conversational, not too many questions, but if you have any questions later on, please put it below in the comments and maybe we'll do a second version for you guys. Thank you very much. Matthew, down to you. Please introduce yourself.
Hello, everybody. My name's Matthew. I've been in the motor trade for a long time now, various different roles in the motor trade. I've spent the last 8-9 years in sales, with a focus on finance and selling of insurance products and car finance, which kind of leads us on from Dotun's last video of hints and tips surrounding car finance. So hopefully we'll be able to give you some hints and tips and also some buying tips in the future. And like I say, if Dotun's got some questions for me, and then if anyone's got any questions, please pipe up and then we'll go over them at a later date.
Today we're going to kind of go over the bits that we talked about in my last video. So we talked about PCP, hire purchase, personal loans, as well as PCH. So Matthew has a lot more options. There's, he told me there was a lot other things to consider and the pros and cons for each of them. We're just going to talk about the various options that you have. I think in my last video that Matthew already mentioned, we talked about PCP, hire purchase, PCH, and personal loans. And I basically gave you guys the options because I'm not really a certified person to tell you what you should go for. And obviously it does depend on varied things, but Matthew will be going into each of them in a bit more depth. And I think there's other options as well in the market, which Matthew will be able to kind of give you guys some tips on. So down to you, Matthew. What should we sort of start with? Obviously, we talked about personal loans. Should we start there?
Yeah, I mean, to be honest with you, yes. The first thing to mention is buying a vehicle, buying any asset, depreciating or investment asset is a very personal investment to start with. Whether you're buying a small car, a big car, a house, a computer, the buying options across the board are very personal, everyone's individual circumstances. What fits one person will not fit everyone. That is probably the biggest thing that you take out of working in the trade, working with finance and insurance products, and why it pays to spend time looking at those specific products. Yes, you're right. The first thing we should really cover off is the personal loan aspect of it, because the personal loan aspect is something that people may or may not be aware of some of the pitfalls with, and then we can always refer back to the personal loan when we go through the other buying options. Yeah. So yeah, let's cover off personal loan.
Who would you say is the perfect person for personal loans? Give us a sort of persona for an ideal person that would prefer personal loans.
So personal loans are aimed squarely at people who want unsecured lending. Now, what I mean by that is when you take out a personal loan, you are the guarantee on that loan. If you default on that loan, by default, I mean fail to make payments on it, it's only you that is affected. Anything you buy or outcome from that loan is not at risk of loss. So you could take out a personal loan, buy a computer, buy a car, buy anything you wish. It's not at risk. The clauses at the bottom of these loans, your only risk is your credit rating and your house if it's secured against the house or whatever else. So, it's an unsecured loan. There is also available secured personal loans, where the bank or financial institution will take it and leverage it against, say, a house or any high value assets that you have. typically anything over £25,000 in value has to be secured. And that is something that we will cover across the whole 4 options in terms of funding as to what that is. That £25,000 comes up quite a lot. So with personal loans, you covered on the last video that you can go to your banks, you can go to various different financial institutions. There's payday loans, which are considered as personal loans. So that, you know, these things maybe shouldn't be involved in the purchase of a product. But if you're talking about outright personal loans, your banks, building societies, and a lot of people might not be aware that car dealerships also offer personal loans through their financial partners. So the personal loan aspect of things comes into play, that you will be offered a personal loan by a car dealership if you're in the unfortunate circumstances that your current vehicle that you're trading in maybe doesn't quite clear off the finance that you have, and the future vehicle that you're purchasing, the outstanding finance cannot be cleared by a deposit. That is basically the gist of it. In that instance, a hire purchase agreement would then not be able to cover off the negative equity. Now, if you're looking for a glossary in these terms, I will put a glossary.
Thank you very much, Matthew, for that. We're going to talk about hire purchase this time. And as Matthew's mentioned, personal loans or personal finance is actually a lot more complicated than you think. There's a lot of stuff involved, and sometimes with garage finances, you can get the personal loan options, and they're kind of decorated in different ways. They come in different forms. So personal loans is not as simple as just going to the bank. Obviously, that is included, but there's a little bit more to that. So I will ask Matthew to get us into the next thing. We're going to talk about hire purchase and what are the benefits. Why should someone get it? Or maybe let's kind of do a similar type thing. What is the typical persona? Why would someone go for hire purchase? Thanks, Matthew.
Okay, so the typical kind of use case scenario for anything hire purchase is anything where you wish to secure the lending against the product. So be that a car, a computer, or a washing machine, it doesn't matter. What happens here is you take out the loan and the finance company owns the product until all hire payments are paid. And the only time when you actually own the product is when the option to purchase fee has been paid. Now, if you look at your finance agreements, the best way to find out if it's a hire purchase agreement is there's an option to purchase fee. It's typically about £1 at the end of an agreement. This can be as high as £200 and £300, depending on how old your finance agreements are. Hire purchase agreements vary in term from about 12 months right the way up to 6 years. So you can, especially with car finance, it varies from 12 months to 6 years. The purpose of a hire purchase agreement is you want to own the product at the end of it. So you want to own that car at the end of it. Now, that isn't strictly true. There is times when you can change that. You're free to purchase the vehicle at any point in time and sell it. So, for example, if you were to buy a car 3 years into a 5-year finance agreement, you decide, I really want to buy a new car, you can trade in that vehicle, settle off the outstanding finance, and then start a new finance agreement. The protection that you're given with hire purchase is probably one of the other factors that hire purchase is good for. With hire purchase, you're actually protected under the Consumer Credit Act, more so than any other finance agreement. So what that means
tell
is
us more
that
about that.
So you've got more protection as a consumer. It also covers partnerships up to 2. Bit of an obscure one, but it covers anyone up until a partnership of 2, and it doesn't cover business. So in that, you've also got things like the halves and thirds rule is what it's called. So once you have paid half the finance agreement, you have the right to basically walk away from that finance agreement without repaying it. If you've paid half the total amount payable, You don't have to make any further payments. You can hand the car back to the finance company and walk away. The third rule only applies to Scotland, unfortunately, because under Scots law, sorry guys in England, under Scots law, once you've paid a third of the amount payable, you're then protected under the courts. Your vehicle cannot be repossessed without a court order. In England, that can happen at any time. The main things with hire purchase that you need to remember, it's typically on higher value items. So anything over £25,000 is almost guaranteed going to be hire purchase. If you're purchasing a car that's a high value, the finance company wants to retain that, and they want to make sure they're going to get their money. And it's not uncommon for them also, be a little more strict with the hire purchase rules. There is use cases for hire purchase agreements, and there is also limitations in the use of the vehicle as well, because the vehicle actually is owned by the finance company. And they have a lot more say over what you can and can't do with the car.
So with personal loans, you mentioned that the maximum is typically about £25,000, and now with hire purchase, anything over £25,000 is typically hire purchase product. Is that right?
Well, yeah, you can get personal loans that are more than 25,000, but you would be expected to be a homeowner, own your vehicle, own your home, or have a substantial amount of savings in the bank that can be used as security.
So that's the difference between secured and unsecured loans, right?
Yeah. So secured and unsecured loans, hire purchase is a form of secured finance, and it also means that you've got a lot more protection as a consumer. And it also means that you have a lot more rights and a lot more rights, but you've also got a lot more responsibilities as a hirer of a product as opposed to the buying it outright. Yeah,
absolutely. Thank you very much for that. Could you please give us a little bit of a background, who you've worked for in the past, just to give people that sort of clarity on how you know what you know?
My career started off in 2012 when I left working with Davinci. We worked together for a brief period. In 2012, I decided to go and work for one of the largest car dealership companies in the UK, Arnold Clark Automobiles. Went to work for them for 4 years, thereabouts. So I spent 4 years working my way through Arnold Clark. Started off with Arnold Clark Mazda in Aberdeen, and then laterally finished off when I was working for Ford, where I worked as a Ford specialist. Then I actually left and went to Shetland, where I worked in Shetland for the local Citroen dealership for a brief period, working in the after sales side of things. And then moved on to work for various different companies in hire and plant, as opposed to domestic vehicle, working on the commercial vehicles and plant side of things. So excavators, heavy equipment. And then laterally came back and started working for Honda in Aberdeen here in 2018. 2019 went to work for Peter Vardy Group, and that's when I decided that it was possibly the time to get out of the motor trade just before COVID hit, which was possibly the saving grace for my sanity, unfortunately. But it's been a long haul in the motor trade. Great experience, and you meet people, which is where a lot of my background comes from. You see the terms that people have been subject to. You also see the good and the bad. Now, in the time in the motor trade, you see it all. I've seen 2 recessions where people in Aberdeen have been involved in major financial difficulty, and I've seen how finance has sorted that, has helped people. But I've also seen how the bad side of it happens and how people have become stuck. And it's a beast that isn't to be underestimated. Absolutely. The financial services industry has has a lot of good and bad involved in it. And
Yeah.
if you're not aware of what your consumer rights are,
Mm-hmm.
you can get stuck very quickly.
Absolutely. And I think, you know, adding on to that, there's a lot of finance information out there as well. And it's just about watching videos like this and doing your own research that helps, you know, people to actually make that decision. And, you know, there's nothing better than making the right decision at the start, rather than obviously being in that position where you regret the decision you've made and then thinking, I wish I did this, or this, you know, this wouldn't have happened. Yeah. So we want to kind of talk a little bit about PCP, because I think a lot of people love that idea of having a new car every 3 years. So Matthew, tell us what the positives and negatives are about PCP.
Well, the benefits for PCP are, it's based on hire purchase. So you still have that protection mechanisms that are built into hire purchase.
Yeah.
But you've also got that benefit of a lower monthly payment, a lower term, and you've also got the protection which has been added of the ability to hand the vehicle back at the end of that term or agreement. Now,
yeah.
that end of term hand back is actually not just at the end. You have the right to do that once 50% of the total amount payable on that agreement has been paid.
Yeah.
So if you add up everything you've paid into that agreement, once you divide it by 2, once you've paid that amount, you're protected. You can hand the car back at any time.
Absolutely.
The pros and cons. So the pros and cons of a PCP. Well, the pros of a PCP is the low monthly payments, the mileage limitation isn't really an issue if you can add up how much you normally drive. The other pros are that you're protected. You've got a much lower monthly payment, which means you can budget. And typically you can build into that your servicing agreements and all your other bits and pieces. You know what's coming out of your pocket. And you've got a newer car for 3 years, 4 years, and you change it.
Yeah.
The flip side of that is the disadvantage of a PCP are the condition of the vehicle then. So if you are going to hand the vehicle back to a finance company, you are likely to be penalized if the vehicle is not in good condition. So you must keep the vehicle in good serviceable condition.
Yeah.
You're also subject to a mileage limit, which I mentioned earlier.
Yeah.
You must be under that mileage limit. Now, a lot of people don't know this, but the mileage on a PCP is isn't prorated. So say you were to take a 3-year finance agreement on a PCP or a 4-year at 3,000 miles a year, or say 7,000, for example, which is 28,000 miles. But after 3 years, you decide to hand the car back to the finance company. The mileage at that point is still 28,000 miles. So, for example, you can hand the car back if it's got 27,000 miles at 3 years. A lot of people are under the impression that they're going to get fined because the mileage is over 21, which would typically be the prorated mileage.
Absolutely.
So, but you need to read your agreements. These finance agreements are full of loopholes, and they're only there to protect the finance company. You know, the consumer laws are there to protect you, but the finance company's got loopholes built into all these agreements.
So Matthew, one question. In your experience working within the car industry, what would you say is the biggest extra payments that you've seen? You know, with when someone's handed back their PCP vehicle, what would you say is the sort of fine, the largest fine that you've heard of so far?
I think fine is possibly the wrong word to use.
Okay.
Levied payment would be the better way. I mean, it's written in your agreement how much you would have to pay. Now, typically, I've seen people being penalised for alloy wheels, bumpers, bonnets, damage to the vehicle. I mean, to be honest with you, it's only recently that we've started seeing people handing these cars back to finance companies. Historically, PCPs were always the car was always worth more than the finance final payment. So people always traded them in. Nowadays, with the financial market and the way it is, the used car market has taken a big hit. And as such, these vehicles that had PCP agreements from before, the future values are set way too high. And they are starting to get handed back to the finance companies. The biggest fines I've seen people having to pay £15,000 due to mileage. If you are in the wrong mileage banding on your PCP, beware. You are seriously in trouble. Now, this is a warning shot to people who have taken finance agreements knowing fine well that they are in the wrong mileage banding. Now, it's not so much a problem when everyone's sitting at home, lockdown, but if you've bought a vehicle in lockdown and you think that you're in the wrong mileage banding, start putting it away now, because it will come back to haunt you.
Absolutely.
I mean, I've seen some pretty horrific hand payments. But finance companies are not an ogre. They're not there to exercise your wallet. They're there to help you. You know, if you are open and honest with them, they are helpful to you.
Absolutely.
Likewise, with people that hand back vehicles early, this is a big point that has been raised on the internet. It will not go against you on your credit rating. It will also not mark you down in the future. If you're serial offending, i.e., you repeatedly hand back vehicles at 2.5 years and 5-year finance agreements, 2 years and 4-year agreements, if you're permanently exercising your right to return these vehicles, the only thing that's going to happen is that finance company might impose some restriction. You're not penalized by any other finance company.
Absolutely.
It's not fair. So please bear that in mind, people. It's not a case of you're a bad person for handing your car back. You're merely exercising your consumer rights, and nobody's going to penalize you for that. That's the benefits of a PCP.
Perfect. Okay, so the next thing we're going to talk about is personal contract hire. I guess this one is probably less popular, but I'll ask Matthew to sort of go through it with us and to use his expert eyes to basically tell us about the benefits and the pitfalls with PCH.
So let's break it down. There's 2 types of contract hire agreements that you get. They're broken into 2 categories: personal and business. Now, it goes back to what I said before about consumer protection. The personal contract purchases are all designed for consumers.
Okay.
With a consumer orientated agreement, VAT is inclusive on any of the payments that are advertised. And as such, you will always be treated as an individual. Business contract hire is a totally different ballgame and is designed for businesses. So all the payments are advertised plus VAT, and as such, the vehicles as such are designed for business use. So with personal contract hire, the benefits and the pitfalls. Well, the benefit is that you're getting a brand new vehicle. You know what that vehicle is. It is generally delivery mileage. It will be serviced if you take servicing. Within your agreement, and it gives you a fixed monthly rental, subject to the miles that you stipulate in your agreement. And that's generally it. It's a lot cheaper than buying a vehicle or personal contract purchase. It is a great way of purchasing a vehicle. However, the sticking point for me is the downfalls. With a personal contract hire, you will never own the vehicle. It's actually not legal for you to purchase the vehicle from the finance company.
Okay.
You have to, the only way to purchase that vehicle is if a third party buys the vehicle from the finance company. You physically cannot buy it. It has to be someone else that you know. The mileage limitations are a lot stricter than a personal contract plan.
Okay.
Your restrictions on the vehicle, you will never have the V5 document for the vehicle.
Yeah.
So taking the vehicle abroad and doing certain things with it means that you then have to approach the contract hire company and ask for permission to take the vehicle abroad. It's quite an in-depth thing to do. It's quite, you know, it's involved. The flip side of it is the costs. Now, I call them buyout costs because to get out of a PCH agreement is incredibly costly. So, as a warning to people, I have seen a personal contract hire company charge a customer every remaining rental on a vehicle that their late parent leased.
So what does that mean? Give us an example.
So the vehicle was 6 months old. It was a 3-year agreement.
Yeah.
And the monthly payment was about £300 a month.
Wow.
So they were asked to pay back the remaining rentals, which is 2.5 years at £300 a month.
Wow.
To get out.
I'm trying to do the maths very quickly there, and that sounds like almost £9,000 or maybe more.
Yeah.
Wow.
The best case scenario I've seen is they've asked a customer to pay up to the value that the vehicle's auctioned for. A lot of people are unaware that when you hand a car back to the finance company, it isn't the finance company that actually comes out and inspects that vehicle. It's actually it's a car auction company.
Yeah.
So it'll be a company like British Car Auctions or Mannheim Auctions that come. They will inspect the vehicle at the side of the road where you are, and then you will sign an agreement to say that that vehicle is in that condition.
Yeah.
When you then put the vehicle to auction, it has a value. Now, some finance companies, if you exit the agreement before the terms, i.e. PCH agreements, you'll be asked to pay up until that amount is outstanding. It's just so that the finance company can recover their losses, so to speak. But if anyone wants an idea of what the costs involved in handing a car back are, the biggest costs are mileage. The second biggest costs are vehicle repairs. There is a guide, and it's called the BVRLA Guide to Fair Wear and Tear.
Okay. Yeah.
So it's the British Vehicle Rental and Leasing Association.
Perfect.
So these are the guys that. So these are the guys that authorize all the rental companies and all the leasing companies in the UK. I will send a link so you can put it in the description.
Absolutely. Thank you.
And this applies to PCP agreements, hire purchase agreements, and also PCH and BCH agreements. So these costs are uniform, and these are maximums. And it goes through and breaks down how much the maximum you will be charged for each individual repair is.
Yeah.
And it's standardized. So you're not having to pay body shop fees. You're paying a standard fee for an alloy wheel. You're paying a standard fee for a, body to be repaired, the door to be repaired, glass to be repaired, etc.
Yeah.
I mean, to be quite honest with you, the general consensus with all these agreements is keep a good condition vehicle. Yeah. There should be no penalty. And personal contract hire is not something to be turned down. It is a great agreement. It has its place. If you know you're going to keep the vehicle for the full length of term, great. gives you a cheap alternative to buying a vehicle.
Yeah.
And it will generally give you access to something that's a little bit more exotic than you could afford if you were doing it on a PCP.
Yeah.
I mean, take for example, you've got some of these like Fiat 500 Abarths and things like that that are a little bit more exotic. Their monthly payments are similar to what they would be for a more standard version of the vehicle on a PCP.
Yeah. So Matthew, you know, I think you've covered a lot of good points there, but is it fair for me to say that the car companies are not out there to try to get you in regards to the repairs for your cars? I guess if you have an idea of the regulations and what's actually included when they when they have a look at your vehicle and they do the assessment, you're less likely to be caught unawares as to the costings. Am I right in saying that?
Absolutely. I mean, to be quite honest with you, when you take your vehicle and trade it in, it should come as no surprise to you that your vehicle is going to be worth less than you think it is.
Absolutely.
I mean, that is certainly something that a lot of people struggle with, is the concept that their car is not made of gold.
No.
Now, I mean, everyone wants to think they have the best of the best, and it's your hard-earned money that has purchased it.
Yeah.
But when it comes to trading in your car, see it from someone else's perspective. Would I buy that? Would I buy that car?
Absolutely.
And ask yourself the question. You know, if you had scratches all over your car and dented alloy wheels and chips and it was dirty, would you buy it? Probably not. So why is a garage going to buy it? At the end of the day, the car dealerships are out there to make money, but they're not out there to con you out of money.
Yeah.
Which is fair to say.
Absolutely. Yeah, that's perfect. I think that's sort of a good place for us to sort of round up. I'll open the floor for you, Matthew, to kind of add any extra bits. I think I've run out of questions now, but if you have any sort of hints and tips for the people watching this right now, because I think you guys have probably, thank you very much, Matthew. You've done a fantastic job with everything that you've mentioned today, and I think you guys really see the benefit of that. But I just wanted Matthew to sort of round it up for us with overall tips and potentially what he would go for if he was in the market for a vehicle, and then we can sort of round it up.
I mean, absolutely, yeah. The biggest thing I can say to you, everyone out there, no matter where you're buying your car from, be honest with the person that you're selling the car to. The biggest gripe that any salesperson's going to have is when you throw a curveball. If you're upfront and honest with them, and you come to them and show them exactly what you're needing with a reasonable budget in mind, they can do the best to advise you on what to do. Now, the selling of finance and insurance products in the motor trade is regulated, but it's non-advised selling. So only you can make the decision as to what is right for you as an individual, but it is up to the car dealership to give you all the options available. And make sure they do give you all the options, because some vehicle manufacturers, for example, Vauxhall, have a 0% finance agreement that isn't necessarily the best way of purchasing a finance package. 0% isn't always the best way of purchasing a vehicle. When you compare it to an interest-based loan, you're getting potentially a large discount on the vehicle. So that is something else that I could cover for you if anyone's interested, is the difference between interest-based and 0% finance agreements, because unfortunately, money isn't free anymore. So that's a big loophole to go down, but we can cover that another time. In terms of what would I go down the route of if I was purchasing a vehicle, well, my new occupation is chauffeur-driven vehicles and executive hire. We buy all our vehicles on effectively personal loan. And the reason for that is because of the vast miles we're doing. We cover 60,000 miles a year. When you're covering that, yeah, when you cover large distances like that, the finance can't keep up with the depreciation on a vehicle.
Yeah.
So it makes sense to purchase the vehicles from a bank. But when it comes to personal vehicles for myself, if I was looking for a new-ish vehicle, for me, it would have to be a personal contract purchase. And in terms of the mileage limitations, I would always set them slightly below what I'm actually going to cover, and be prepared to pay the back end money at the far end. The reason for that is you don't know if you're going to keep that vehicle the full length of time or not.
Yeah.
I mean, in my opinion, I always encouraged people to be as clean cut as possible when it comes to these finance agreements, because you don't know, your circumstances will change. Keep an open mind. At the moment, with the used car market and the new car market the way that they are, there is some great deals to be had out there, and garages are willing to bend over backwards to look after people. And that is certainly one of the biggest things that you have to do. And stay local. Don't buy from online supermarkets, because the online supermarkets are only in a race to shortcut everyone. I mean, there's a lot of online marketplaces out there that are just screwing over garages. So I would suggest, yes, you might be getting a better deal, but someone's getting a raw deal somewhere. So stick to your local garages, or buy from the reputable names, your Peter Vardys, your Arnold Clarks. They're the ones that at the end of the day are going to look after you.
Absolutely.
I think it's become very apparent through this COVID-19 pandemic that looking after local business is certainly the best way to go, because they are the ones that are going to be there still, or not be there if you don't look after them. And nobody wants to travel 50 miles to get their car serviced.
No, that makes total sense. Thank you very much, Matthew. So thank you, once again, fantastic stuff. And what we're really looking to do here is to, raise the awareness of the financing options when you're buying a vehicle. According to Matthew, his preference would be a PCP if he was going for a new car. And that makes total sense based on what we've said previously. So, well, thank you very much, everyone, for watching the video. Please like, comment, subscribe on the channel. I have been Dotun, and my man here has been Matthew. And thank you very much. Have a good evening, guys. Cheers. Bye.
Thank you. Cheers.